Welcome to the Do Good X podcast, a sanctuary from the entrepreneurial grind. Hosts Kimberly Danielle and Stephen Lewis, advocates for impactful entrepreneurship, guide you on the path where purpose meets business. Join us to slow down, reconnect, and explore the challenges of under-resourced entrepreneurs, uncovering the unique journey of building businesses that make a difference. Now, your host.
Hello and welcome to the Do Good X podcast. My name is Stephen Lewis and I am a catalyst for positive change in communities and businesses. And for over 2 decades, I have been inspired to work with leaders and entrepreneurs to live and work on purpose with intention, faith, and a commitment to their well-being. And I'm delighted to be joined with my co-host, Kimberly Danielle, who will introduce herself and our guest for today.
Hey everyone, it's good to have you here with us. My name is Kimberly Danielle, as Stephen said, and I am a community builder, a communication strategist, and a coach who comes from generations of entrepreneurs, faith-driven entrepreneurs, and leaders who believe that our purpose should be driven by us contributing to the common good. And I am happy to be here today. I am excited about our guest today because he comes with a different perspective and background than other guests you've heard from in the season so far. So today we have John Garry joining us. John is a partner at Garry Elevator, which provides early stage capital for companies whose products and platforms focus on infrastructure deployment, climate resilience, and community well-being. His work today is inspired by him spending much of his early life exploring community and capital. And it is also connected to his roots with his paternal grandfather operating a grain elevator for the better part of the 20th century, which Garry Elevator now seeks to continue the legacy of sophisticated, hyper-local financial services. John's work in endowment management and venture capital has shaped an investment philosophy that emphasizes the resilience and relationship over other factors. At the University of Notre Dame, he led the investment office's research in crypto assets. At High Alpha, he helped to invest in early stage companies and scale the firm's corporate venture studio arm. Funding and capital, as we all know, is an important conversation in the world of entrepreneurship, especially for Black and Brown entrepreneurs, most of whom are challenged with gaining access to funds necessary to test, launch, scale, grow, sustain their businesses. And there are tons of articles out there. And recently, I've been reading upon some articles that said early this year, stating that VC funding for Black founders has steadily decreased since the death of George Floyd in 2020. Just to put some specific numbers to it, in Q1 of 2023 and Q2 of 2023, Black founders raised 0.74%, not even a full 1%, 0.74% of all venture dollars. And then in the third quarter of last year, it was 0.13%. Fourth quarter, 0.2%. So we have not even hit the cusp of 1%, let alone anything more than that. And while there are many other forms of capital beyond venture capital, today we get to hear from John's story, his work, and perspective on venture capital for early stage companies. So thank you so much for joining us, John, today. I look forward to our conversation and the insights and wisdom that you get to share with us.
Well, thanks to you both for having me. And honestly, in our early conversations, I've just really appreciated the chance to learn from the two of you. So really excited to kind of dive into these topics together. And, one thing I'd add to your commentary at the beginning on funding access and availability in venture is not only is the percentage declining, but the asset number as a whole, the amount of VC raised total is going down. So the dollars are going down and the percentages are going down. And I think there's a lot there to explore in terms of why that's happening, ways to solve that. I think there are a lot of different approaches, but excited to speak more on ways that technology and community, I think, can be allies in the fight to increase funding availability for under-resourced communities.
Absolutely. And, just to take a couple of steps back, because I am keenly aware that there are some folks in the entrepreneurial world, especially those who are just getting in, that venture capital, that term may or may not mean something to them. They don't know what that is. And it's a phrase that's thrown out a lot in the startup world. Some people are like, oh, I need to get venture capital, but not really fully understanding what it is that they're saying. So can you break down what venture capital is and maybe give our listeners 3 key things they should know before deciding if it's the right path for their business?
Yeah. So, as you mentioned, venture capital kind of covers all manner of sins, but ostensibly, it's just outside funding for early stage ventures or early stage companies. And so, I think a lot of times entrepreneurs say the only way for me to raise money for my new entrepreneurial endeavor is venture capital, and while that's certainly sort of the broad story that is kind of in the internet zeitgeist, it hasn't been true historically, and it isn't true today. So, I mean, there are a lot of different sources for early stage investment. Obviously, customers are a great one, but then also, CDFIs, et cetera. So all of this just to say that venture capital is one sleeve and a very specific sleeve of money that's available or should be available to early stage entrepreneurs. In that vein, I think that rather than 3 things for folks thinking about accepting venture capital, I would say 3 things for anybody accepting capital at all in your business. Like one thing I think about is your cap stack is your character, and the types of people and the type of money that you invite into your company early on, no matter what you tell yourself, is really going to influence the type of business you build, the type of entrepreneur you become, and the type of community that you're able to support around that. And so, at the risk of being pedantic, I think the first question is like, do I have a strategy? Do I understand the problem that I'm solving, the context, and the customer that I'm trying to help well enough to say, I'm going to choose this way and not the other way? And, I think most entrepreneurs who are aware of venture capital are already past that stage, but it's good to make sure that you feel strongly about the strategy, because the second question I would ask is like, is your capital provider aligned with that strategy? And oftentimes when it comes to venture capital, again, people will say a lot of things, but the fundamental answer is no. I think there are a lot of strategies that emphasize long-term relationship, building a kind of deep and multifaceted relationships with customers that are fundamentally at odds with the venture model, at least as most venture capitalists practice it today. So they're looking for incredibly fast growth. They're looking for capital efficient growth. They're looking for you to spend a certain amount of dollars and get multiples of those dollars back. And so again, you should be asking yourself, like, is this the type of strategy that my business is built to facilitate? I think if you look back at entrepreneurship in earlier periods of American history, a lot of it is run through banks. A lot of it is run through kind of community financial organizations, and the types of businesses that were built looked fundamentally different because they had to say, is my business aligned to the needs of a bank? So I think in some ways, those businesses were a little bit more reasonable in their growth expectations. They were a lot more restrictive in terms of who could access capital. Obviously, as I'm preaching to the choir here. Bank underwriting requirements. There was a lot that was said, and then there was a lot that was unsaid. And obviously restrictions. It's sad to say are easing as we get more and more into the equity side of things, but I think continuing to explore new financing mechanisms and new financing sources means that we can open up types of capital to more and more people and more diverse decision makers. So, and then one last point, because you asked for 3, is my strategy like concept risk or is it working capital risk? I think a lot of entrepreneurs are asking themselves, if I spend $1 here, how do I at least get $1 back? That's already top 10% of entrepreneurs, period. You're breaking even. Um, um, I think a lot of times people say, oh, this, like a restaurant isn't a good business, whatever isn't a good business. Most businesses aren't good businesses, and so I think just like breaking even is one type of thing. And that's where venture capital can help. Hey, we're exploring. The other side of this is it working capital risk? If I spend $1, how do I get $1.25 back? Or if I spend 50 cents, how do I get $1? Those types of efficiency questions are you just want to know what you're asking and make sure that your capital provider is aligned with that. So that was a little bit of a rambling set of thoughts on venture capital, but at least that's how I think about it. And I think that the net output is just make sure you as an entrepreneur feel really comfortable with the answers to those questions, because I think you should be asking your capital provider directly, this is how I feel about these things. Are you okay with that? And they may, not know how they feel about it themselves, and they may say something that doesn't turn out to be true, like stated preference versus revealed preference is a real problem in venture. But at least you kind of have it on record, and you can start a relationship around that set of conversations and grow from there.
Two questions. One is, if most businesses may not be good businesses, how do venture capitalists evaluate what businesses are worth investing in? And the second piece of the question is there a threshold in terms of one's readiness to actually go after venture capital? Like, is it revenue? Like, how does a person or business determine whether or not they're ready?
Yeah. Your first question is the critical question, and it's as varied as the number of venture capitalists out there. How do you think about what's a good business? I think really it depends on stage and where you are in that journey of spend $1, get $1 back, or hey, we're much more efficiency focused. Really, I would say for myself, when I'm sitting with an entrepreneur, there are a couple of things I'm really looking for. One of which is a very strong perspective on the problem, either through direct experience or deep sets of research with the end groups that are experiencing that problem. The second is like variant perspective on either what the problem is or how the solution will be delivered. So when I'm talking with an entrepreneur, some of the best things I hear are, oh, that's really interesting, and it's a good question, but there's a better version of that question. And if you knew the customer better, you would phrase that differently. And let's talk about the right version of the question. So they're showing me deep domain expertise in one form or another. The third is like collaborative vision. Is this an entrepreneur that I can work with, that I trust, who's willing to tell me you're totally wrong on this, but then come back and say, okay, actually you were 97% wrong. Here's the 3% that's worth it, and we're going to use that. And so a real dynamic conversation. And then the last is somebody who can build resources around the problem and the solution. So in the early stages of a venture, it's really not even relevant to say, okay, what are the unit economics? We can say we have a reason to believe that unit economics will emerge, but it's much better to say, okay, the person who's going to help us figure this out is here, and we managed to convince them to come and work with our team and believe in this story. So for me, it's are the ingredients of a good business there, and then I'm willing to take the risk of do we figure it out or do we not? I think there are whole hosts of blog posts that lay out much more quantitative metrics where somebody says you need to have a TAM of this size, because there are a lot of venture capitalists who are really focused on market size in a very specific definition. There are versions of venture capital that are very focused, particularly if you're dealing in well-defined categories like software as a service, et cetera, on like unit economics and ramp time for sales associates, et cetera. Like, again, those are very specific sub business unit definitions. But I think like readiness for raising venture capital is really down to the individual entrepreneur. When are you willing to look somebody in the eye and say, I believe in this enough to take your money, and then we'll keep having this conversation, and I'll hold myself accountable to what we talked about. Like, that's actually I would say a pretty big break point for a lot of folks, because it's one thing to talk about your venture, it's then another to start signing documents which kind of like legally bind you to something. And I think the corollary to that is when you find somebody who's kind of willing to be a partner in that and help you feel ready to take that step. That's a great time to sort of consider, okay, should I actually do this? Is this a right now decision? So I don't know if that answered your question so much as it is to say, there's infinitely personalized versions of this. And sadly, most people's experience of venture capital is actually just one person. I've had experience with venture capital, or I know Sarah, right? Like those are the two versions of it. So
that's helpful. I appreciate it.
Yeah, that's insightful. And I also think a lot of people talk about readiness of the business, but I don't really hear people talking about readiness of the entrepreneur. And that's a big deal to feel confident in being in the position to go out and pitch your business and to know your business well enough to talk about it to somebody who will create this financial commitment, and for entrepreneurs, that legally binding commitment. So that's a really, really helpful point. As an investor yourself, you talked about one of the things you're looking at is the ingredients of a good business. But I know for Garry Elevator, you're investing in companies that also prioritize social impact. So not just financial return, but social impact. So can you just walk us through the opportunities that this creates, but also the challenges that you face in balancing these particular goals, balancing both of those? And, just looking at, does it cause some challenge, for instance, in prioritizing social good or social impact, community impact, and you sacrifice some of the financial return? How do you approach that, and what are the opportunities and challenges?
Yeah. So I think the first thing I would say is I don't necessarily consider Garry Elevator an impact investing fund. We just have certain beliefs about ways to generate financial return that have strong overlap with like social good, community well-being, health, etc. And not necessarily being a fan of ESG is not a particularly hot take, but I would say like my reason for questioning ESG protocols is most of them to me are just a version of the question of how would you run a business if you wanted it to be around in 50 years? And the fact that is a small subset of large businesses in America is a problem for another day. But I think about like ways to generate financial return, and obviously there's taking a large percentage of the value that's created in an interaction. But there's also a long history of duration being the biggest driver of investment returns. And so a lot of the decisions that we make as a firm are how can we be in a long-term relationship, and how can we expand the duration of our relationship, not only with entrepreneurs and with companies, but with the communities that we serve. Because, frankly, we feel like we're pointed at a very large market, which is, defined a number of ways, but
you can either think about it as small and mid-sized cities in the United States. You can think about it as underinvested communities from an infrastructure perspective or a climate or a well-being perspective. It's an incredibly large market. We think it's a market that has a lot of value to bring to these interactions. If we can just find a way to serve them and be thoughtful about technology so that it's affordable and cost effective, there's going to be a lot of value in that interaction, and it's going to have a lot of duration to it. So we think like we're just going to have like these really healthy long-term relationships with communities that will flow through to strong investment returns. I think the other side of long duration is just, especially in early stage investing, it's completely a conviction game. And I think conviction has a lot of investment connotations. It also has like a lot of spiritual and religious connotations. And so at a certain point in an entrepreneurial venture, the tape is not going to be going your way. Like the numbers are going to be bad. All the experiments you've run are going to have returned data that isn't what you were hoping for it to be. Somebody will be going through a personal issue, et cetera. And if financial return is the only thing that you're prioritizing there, as opposed to some deeper conviction about the way the world ought to be, you're going to hit the eject button. You're going to say, I'll take 50 cents on the dollar, get me out of here. And I think that is one of the most dangerous decisions that we can make, which is to cut off duration in the name of like, let's just protect our downside. And so the fact that, living and working in the types of places that our entrepreneurs and our fund is serving just gives you a lot of buffers to say, okay, like when it's really scary and you're sort of like worried about what's happening, there's going to be this whole other set of things that are going well, this whole other set of community relationships that are going to add richness to the investment and help you protect your long-term commitment. Because the problem with financial returns and financial motivations is like long-term there is like on a quarterly basis. Like we get a new balance sheet and you decide how you feel about it all over again. And so all of what I would say is like it certainly has been difficult to share some of these perspectives with traditional financial investors who are saying, hey, I understand these couple of traps. I just want you to run them as fast and as hard and in as many places as you possibly can. And to say, okay, that's one way to invest. That's one way to sort of participate with communities, but we think there's a better way. It might take 10 years to prove out. But I would say if there's any trade to be made, it's just patience. It just takes time to show. It takes time to prove out some of these hypotheses. And like, I find myself a little envious of entrepreneurs in one way only. The rest of their lives, I don't know if I could live, but in one way only, which is a much faster iteration cycle. Hey, I ran an investment 2 weeks later. I know I need to change a little bit. For us, our quality will be measured in 5, 10 plus year increments. So I that skewed a little bit away from your question. I apologize, but just sort of the way that we think about impact and social good as it relates to financial returns.
So what advice would you give to entrepreneurs who are passionate about creating social impact through their business, but they lack access to traditional investment channels?
I think this is a very hard one for me to give advice on, just recognizing that like I'm a capital provider and it's my job to go find those people. And I think it should be as equally incumbent on the system to go out and find folks who are doing transformative, good, exciting things, as it is for them to sort of say, okay, how do I fit myself into the way that the world is now? But I think I would say there is a noble and there's a cynical version of every story. And I let's maybe tweak that into a more redemptive structure, which is that there is a noble and there is a financial version of every story. And I think the flip side of a lot of social good pitches are, this is a completely unrecognized market. And if we're just, gosh, if we just push a little harder on what technology can bring to this equation, or if we just kind of rethink the way that value is going to be created and the way we get paid for that, number one, that likely will be a great fundraising pitch to investors. But number two, you often find that the value created is massive relative to the value that needs to be captured in order for you to have a real business. And so, I recognize that the tradition of a lot of communities that have been cut off from access to capital is similar to bootstrapping, is similar to cooperative organization, and okay, let's make do with the resources that we have because at least we have control over them. So I hate to then say, wow, like if you reframe this idea, it might be a great candidate for a bootstrapped start. But I think a lot of times there are ways to just rethink that and use that lens to say, for example, one of the companies that we work with is focused on empowering wireless co-ops. And if you say, okay, we need Verizon grade infrastructure in all of these communities, you're going to design a very different business model than if you say, okay, what does the community actually need in terms of connectivity? And then let's start with like the smallest version of that. And we can deliver service that is incredibly valuable at, $5, $10, $20 a month, as opposed to saying, okay, let's get Verizon to sort of be altruistic and give us some stuff for free. I think there are two versions of that story. And, I think resources are available for both, but I think you tend to be a little bit closer to the problem and a little bit closer to the people that are willing to invest if you start from very close to the problem and say, what's the simplest version that we can start with here and grow from there. So does that resonate, Stephen? I know you both have much more experience with this than I do.
No, I think what you're saying is instructive. Part of what I was thinking about, particularly as you were saying, we go out and try to find these folks and, as a capital provider, and also these individuals are trying to find ways to, find persons like your firm. And I think, sometimes it's, it's a challenge because of what you just named previously with regards to the readiness of these businesses or trying to demonstrate the real value in social impact. And I think sometimes, venture capital seems to be looking for more kind of the short-term gain on the financial side, and recognizing that, at least the real value or the upside of social impact takes time. And there is a time clock that is ticking in terms of figuring out, like, how do you get in, make an investment, see some return and value, and to be in it for the long haul, and also be able to make some type of return to continue to come back and reinvest in that. And so I think many of these folks who are kind of trying to do this work in social impact, I think they're challenging, trying to, like you said, show the financial, at least value of working on this problem, but also like how they actually scale that. I mean, we see that with the UN, with the sustainability goals, wonderful goals, but, it's really hard to get in and really kind of make a dent in solving those problems because it requires so many actors as well as so many investors. And so I think, it requires kind of a community approach to some of these social things that we actually want to work on to make the world a better place.
Yeah, I completely agree. And I think, so much of social good will require consensus and coalition building. But that is hard. That is a hard piece of work to cold start. Momentum is so helpful in coalition building. And someone whose perspective I really respect is Sarah Horowitz, who I don't know if you're familiar with her work, but she started the Freelancers Union. She's the head of the Mutualist Society. And recently the drum she's been beating is like, it just has to work. So starting from something, that you have a little bit more control over, money in equals money out right now. It's easy to pull a lot of resources to that momentum, but I think the momentum, starting to your point, is hey, we've just got to have something small that works, and then we can add resources to it.
Yeah, that's good. Well, let me say that, we're going to move and pivot to our resource roundup. And here we will explore various resources and practical tools and tips that will equip and support underrepresented entrepreneurs as you build your business. So, John, we'd like to start with this question. From bootstrapping to venture capital, there are a variety of funding options available for entrepreneurs. Can you suggest some resources that could help guide listeners through the different forms of capital and how to determine which might be the best fit for their business model?
Yeah, absolutely. I think we are in the early days of a real explosion of the types of funding sources that are available, particularly to early stage entrepreneurs. And I would say, if you're most interested or you feel like venture capital is most appropriate for your business, it's not a new recommendation, but Venture Deals by Brad Feld is a really good way to just make sure that you feel comfortable in conversations. The beautiful thing about venture is, like, it's an addition and subtraction game. Like, if your balance sheet is complicated, something has gone wrong. And so just, having enough familiarity with terminology, it's all very simple concepts, but people add jargon to it to make it intimidating. And so Venture Deals can help kind of move past some of those early stage questions. I think in thinking through whether venture capital is appropriate for your business or not, Bryce Roberts at IndieVC has done some great work around the types of different startups that have a history within venture capital or outside of venture capital, and he's raising quite a bit of money to go pursue businesses for whom traditional venture capital is maybe not appropriate, but who have really high growth potential and who are kind of long-term oriented. I would say those two are maybe two good kind of like ecosystems, and a lot of resources can jump out of that. I think another area of exploration, and this is one I'm only beginning to understand better, is like cooperative and employee owned types of work. And so, Nathan Schneider at Colorado has been for quite some time, been doing a lot of work about community capital formation and the types of structures in which, employees and ownership can share and build towards long-term company health. And so, three very different spheres in the early stage ecosystem, but I found them to be quite helpful in saying, okay, which one of these feels like me?
Thank you. So this really relates to also entrepreneurs figuring out if their business is a good fit for venture capital. Some of the resources that you've already named might be helpful for that, and also entering into those conversations with more of the kind of language to navigate those spaces. If somebody is pursuing VC funding, are there red flags that you would say to be mindful of, to look for, to look deeper into as they are navigating this space?
Yeah. I mean, again, venture capitalists are varied, and I think there are a lot of green flags too, which are great. But red flags, I think, inclusive of the three things that we talked about at the start. Hey, is this person aligned? Do we agree, etc.? Does this person respect that this is my company? I think there are a lot of venture capitalists who say, I'm going to help you, like, lend a lot of operating expertise, et cetera. And entrepreneurs, I think, should ask, is this expertise that I value? And then are they going to respect when my expertise and their expertise differ? And I think there are a lot of, I've really run across a couple of venture capitalists that I deeply respect who always kind of share their expertise and then say, it's your company. And I think that's the exception and not the rule. So other manifestations, if somebody wants to work like on the business with you, you need to make sure that they work for you. And when they're a board member and they're, kind of protecting their capital interests, it's very different. And you have a bunch of governance protections to make sure that, they're not exerting undue influence, but they're allowed to protect their interests. When somebody's like, hey, I'm going to help you go find customers, they work for you, not the other way around. Because I think there's a lot of living vicariously through, I want this entrepreneur to take all the risk, but I want to do the fun things. And so I'm going to, do a lot of that type of advocacy. So, for example, Kimberly, we have a good mutual friend, Matt Bloom. I kind of go to Matt and say, you tell me what to do. Like the reason we're in this relationship is because of deep trust. So if I don't trust you to tell me what you need me to do about this, problem we're facing, if the right answer is, John, you can't help because you're not skilled in the areas I need you to be skilled in, like that's a great answer. And so I would say those are some of the biggest red flags, because there isn't anything ambivalent in an early stage environment. Everything helps or it hurts. And most VCs' first maxim should be do no harm. And I think a lot of times, people try to help, and they either override the entrepreneur's wishes or. Anyways, I'm going on too long here, but I would say it's a very complicated aspect, for entrepreneurs, particularly those taking VC for the first time, because it seems great to have a venture capitalist really want to be close to the business and participating, and it's very difficult to build like formal governance protections around these types of arrangements. So it's really a question of relationship. Can you be honest with this person when they're overstepping? Can you can't really have a lawyer intervene here and say, but we signed this document. So I would say it can be quite fraught, and you got to ask yourself, what am I going to spend my brain space on? What am I going to spend time on? And sometimes like managing an overeager investor is one of those things, and you just got to be careful of it.
But pitching to investors can be a learning process. You learn, you get better with it with time. Are there resources or programs that you would recommend entrepreneurs to look at to kind of hone their pitching skills in order to put their best foot forward in front of creating a compelling investment deck for potential investors?
I don't want to say I'm anti-pitch, but I think I would say a lot of the pitch materials out there are not necessarily built for early stage. I would say it's great when you have results and you want to put it in a pitch deck that says, here's the problem, here's our solution, here's our traction, here's kind of the ask and the outcome. I would say at an early stage, kind of ignore all parts of that you don't feel 110% confident about, and just lead with, this is the thing that we're best at. We have a really strong perspective on this. And I think that for people who are looking for a well-rounded pitch, it's not going to resonate, but they probably weren't your capital provider in the first place. And so, I think there are a whole host of incredible pitch resources. To be honest, they're escaping me at this moment, but I would say like the salespeople and the pitch folks that I most admire tend not to be, let's say, like business entrepreneurs. They tend to be, folks who would give like a TEDx talk, et cetera. I think, like watching Brian Stevenson pitch EJI on TED is, to me, one of the most incredible pitch experiences of deep sharing of an experience, a story of how it affects all of us, and then a very clear ask and an exhortation at the end. It ignores many pieces of that story, all of which are valid and important, but in the name of advocacy, et cetera. The Marshall Gans training, I don't know if, is to me just some of the best pitch training that exists in terms of storytelling, narrative, and tying that into details. So, anyways, I don't know if that's particularly useful to you both, but it's where I've found really compelling pitches and storytelling.
Yeah, what I'm hearing from you is the importance for early stage entrepreneurs to craft their pitch for where they are, leaning into what they do best, but also connecting what they're providing to people, to humans, to the community. And also, there's that ask in there as well, but just making sure that they're providing what they do best and how they're solving or addressing a problem, even if they don't have traction yet, because it's the story that people connect with, and that can compel the right investor, the most aligned investor, to want to partner with these founders.
Yeah, I think that's a much more thoughtful way to put it than it came together in my answer. But I completely agree. And again, I recognize that it's a luxury for me to say, don't fake it till you make it. I think there are a lot of entrepreneurs who are forced to, or feel forced to, participate in those types of pitches and in those types of conversations. But just a reminder that, like, the way that you pitch and the way that you talk about your business sets the expectations from capital providers, and then, like, that's going to be the basis of your relationship. And I think there are a lot of people who get comfortable with that trade-off, but I think it's just a trade-off you have to kind of ask yourself first before, because your pitch will reflect that.
Well, thank you so much, John, for that insight. And for those of you tuning in, we want to support you on your entrepreneurial journey, not just through this podcast, but also beyond it. So if you want access to more resources, and even to go back and see the resources that John mentions and other guests mentioned on our podcast, go to dogoodx.org. Here you can find resources and join our Do Good X LinkedIn community, where we share tools and tips and provide entrepreneurs and change makers with a community of support. So we hope that you will join us there. And now we are going to shift to our last segment, Off the Cuff. We have a series of questions that we have not provided you with, John. And we just want you to give us the first response that comes up for you when we ask these questions. So I'll get us started. What is one of your superpowers, a gift you bring to the world?
Oh, this is off the cuff, and I'm sitting here in silence. I think maybe patience. The flip side of every superpower is a glaring weakness. So passivity is the danger there. But I think I have had a lot of folks in my life and communities that I've been a part of that have encouraged patience, and I think that's helped a lot as an investor.
What has been the greatest lesson so far for you as an investor and in support of impact-driven entrepreneurs?
Yes, the greatest lesson. It's never going to turn out the way that you think it will. So hold deeply to the conviction and very loosely the details. And so I I think, that's something we've said many, many times, and then you have to go through it to believe it. The other thing I think would fall into that category is it's going to take longer than you think it will. And so, again, putting that patience to good use.
What is one of your go-to practices or rituals to slow down, center, and connect with yourself?
Yeah, I'm a fan of poetry, and I love Walt Whitman is very helpful for me. Audre Lorde is very helpful for me, and Kimberly on Ritual, which is Matt's company that he's working on. Rosemary Tromer has this great daily poetry practice, and so I've really enjoyed listening and kind of thinking meditatively through poetry, because it very much helps you get distance from the daily grind.
How much of your success do you attribute to faith versus your own grit, will, or hustle?
I kind of always think if you can't tell the difference between luck and skill, it's much kinder to assume that it's all luck. And so, I think it kind of, I think one fuels the other, right? Like a deep conviction in who I am and whose I am, hopefully kind of lends grit and hard work and long-term commitment. So I guess 100% and 100%, if I could completely dodge the question.
Complete this sentence. Because of my entrepreneurial endeavors, communities will be or are more able to blank.
Invest money behind their own priorities. I really believe that, in Catholic social teaching, the concept of subsidiarity and the people closest to the problem are the most able to solve it if they're provided the resources. And so, I think our job as capital providers is really to make ourselves irrelevant over time. The wisdom of communities and the wisdom of individual decision makers is going to far outweigh anything that I can bring to the table, except in a few instances. And so I just, if our work is successful, we'll have built financial structures and community structures and kind of long-term visions and stories that help people see this is, all of these tools and all of these capital instruments. They're also for me, and I can use them to help myself and to help the people around me.
Well, thank you so much, John. For you listeners, you may have noticed that this is one of the first conversations, I believe, is our first conversation with someone from the investor world. And we will have several more of these types of conversations coming up. So make sure you keep tuned in. But in the meantime, thank you so much for taking the space and time, John, to join us, to share your experience and to provide some really instructive and insightful, not just resources, but also tips for entrepreneurs in the early stage as they approach funding and capital. So thank you so much. We appreciate you.
Yeah, thank you, John. It's great to be with you and to hear your insight and wisdom. So we appreciate you sharing it with us.
Well, thanks to you both. I really enjoyed just the chance to keep talking and yeah, excited to continue the conversation offline.
So I hope you all enjoyed that conversation with John today. For a brief moment, Stephen and I are just going to chat about how to manage stress and avoid burnout. I know that either you all have experience with this or you know somebody who has experienced this. So, Stephen, how do you manage stress and avoid burnout? Or let me also say, if you have experienced burnout, how did you navigate that space?
Well, to take your first question, I would just say breathe. I know we don't, it sounds simple, but I think, part of stress is about, the energy that we kind of lock up in our bodies. And sometimes we just need a pause and to take a breath. And breathing helps you to, I think, kind of release. And I'm talking about like deep diaphragm kind of breathing. You have folks who do like breath work and yoga. I was on vacation last week and I met this brother who was doing this yoga out on the beach. And one of the things that he was saying was sometimes we just need to be able to breathe through the moment. And he was saying that, yoga and doing the kind of exercise where you move breath with your body movements helps you kind of release the stress that you may carry. So I think, breathing is an important aspect. I'd also say exercise. So whether that's walking or riding a bike or, doing some movement with your body to make sure that whatever is bothering you, whatever is pent up in you is not stuck, but is able to kind of move through and cycle through yourself is important in that regards. And then I would say, for me, Kimberly, yes, I have been stressed. Have I been burnt out? I don't know. I'm not sure I know the answer to that. I mean, I'm sure that others may say that, but I think it's every day you need a pause and to move away from what you're doing. The opportunity, the entrepreneurial endeavor will always take as much time as you will give it. The work is never done. And I think the best thing that you can do is to take a break, to retreat, and to reprieve, and to do something else so that you can restore your rest and recycle, and then to be able to come back to the work a new day and do it again. So taking time for yourself each day, taking your vacation or time off and just still away, just get away from the work so you can reset and to breathe and to move and exercise would be my response to the question. What about you?
I mean, I think you've pretty much summed it up. When you talk about breathing, it reminded me of our previous conversation with Jermel Shelton, co-owner of Just That
Yeah.
Honey, where he was talking about one of his practices is just breathing. And that's something that I've more intentionally explored lately with the method or technique of nadi breathing, a breathing technique. Maybe one of these episodes we can go through a technique or meditative practice with our listeners, and so that could be an opportunity. But if you're interested in a breathing technique to help really calm and center you and be present in the moment, maybe you might look that up as NADI. And I would also say, adding to your list, Stephen, accessing the joy within, finding those opportunities to access the joy within, because in accessing that joy, there's definitely stress that's released.
That's right.
And of course, in order to access that joy, you have to know what those things are that bring you joy. Now, if you are a parent, I would say this because I am a parent, don't let it be your child. Of course, my daughter brings me so much joy, but this has to be something that is just for you, that's not connected to anyone else. So for me, the other day, and this gets into the movement piece that you talked about, Stephen, I am visiting family, but I borrowed my younger brother's bike and I just rode listening to music that I connected with, and I had this breeze coming in and I was just so present in the moment. And I thought to myself, this is a moment of joy where I'm not thinking about anything but being present in that moment. And that brought me so much joy. And so I think that is also an opportunity and something to explore where you can release that stress and avoid being burned out.
Indeed.
So that's one thing I'll add. And then the last thing before we close out, man, have yourself a community. We've talked about that so many times across so many episodes, but it never fails. Have yourself a community to hold you accountable, because Stephen, I heard from you. You're like, man, I don't know if I've experienced burnout, but maybe other people said I might be a person to attest to that. So have your people in your community that hold you accountable, and they might notice something in you that you're not seeing, or you're not naming, or you're not being honest about with yourself, and saying, hey, I see you're having lack of sleep, or I see you really struggling. Maybe this is an opportunity for you to pause and really do a reset and take care of yourself. So those are the pieces I would add, Stephen. And I feel like this is a conversation that we can go even more in depth in.
That's right. I mean, because like one of the things is to laugh with your community, but also to laugh with yourself. Don't take yourself so serious. Don't take you and your business so serious. You got to be able to laugh at yourself.
And you know what? I would add this because you have Milo in the background there. Look, maybe there's some animals you have that can that bring you laughter and that bring you joy.
Indeed.
And also get you on the move to take those walks or even to run, whatever that might be for you. But I hope that you are considering ways that you might manage stress, because we're all going to face it at some point. Hopefully it's not the norm for you, but it's good to have tools in your tool belt and in your toolkit to go to help manage yourself in these moments and navigate these spaces and these times more healthily. So continue to think about that, and we hope you join us next time. Until then, be well and do good.
Thank you for listening to the Do Good X podcast. To continue the conversation or access our resources, visit www.dogoodx.org. Join us again for conversations that will nourish your soul, ignite your dreams, and empower you to build an impactful business, one intentional step at a time. Until then, keep striving, thriving, and doing good.